Good evening, this is Ryan Mallory for SharePlanner.com. Today is October 14th, 2010. Interesting day in the market in the sense that what we did yesterday, the exact opposite happened today. Yesterday we saw a huge rally to start the day off of Intel earnings and CSX earnings, JP Morgan earnings. And then as the afternoon came around and got closer to the bell, the bulls started getting a little bit more nervous and started selling positions off. I, for one, was one of those people. I decreased my exposure from about 101% down to 74%, and then on top of that, I took a hedge position in SDS to decrease my exposure all the way down to 25%. Now today, however, if we look at it here on the chart, let's see, I'll pull it up on 5-minute candles here. Right about here is where the, go back a little further, right about here is where we, gosh, I'm trying to find it here. Oh, went way too far there. There we go. Alright, so we open up, we go up, 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 and then boom, we come down. And for most of the day, we were in the red there quite a bit. And then, as the last hour of trading came on, we see what we've seen quite a bit in this September-October rally, where the bulls just come in with unfettered buying. I mean, just buying up everything they can get their hands on. And we cut pretty much the losses in half at that point. I thought we could go much lower today, maybe even 4 or 5 points beyond what our intraday lows were, but we didn't actually do that. So from the case for the bulls, or from the perspective of the bulls, that's a great outcome what we saw today. For the bears, just same song, second verse really for them. I mean, you know, if I was continuing to short this market like I know some people are doing, I would be, gosh, I don't think I could still be trading at this point, because my tolerance for what the Bears have gone through this year is not that great. I'm not going to stay on the wrong side of a trend. I'm not the greatest contrarian or anything else. I'm more of a trade with the markets. You know, I know some people make a living off of contrarian trading. I'm not one of them. Every once in a while you'll see me get into one, but that's because I have a high level of confidence in that particular contrarian trade. But overall, I am pretty much a trend follower. So I want to be trading in the direction of the market, not against it. In any case, though, let's go back to the daily chart here. As you can see, I've drawn this purple trend line. And I hate using the color purple, but it stands out well on this particular charting system. But you look at it here, we pulled back pretty close to this trend line here today. I would say about within 2 points of touching that trend line. So pretty close to a test, if not really a test in general. But we bought it up and close to almost breaking even on the day. On the day, the S&P was down about 4 points, Nasdaq was down about 6, and the Dow Jones Industrial was basically right there at break even, 1.5 points down. The good news for bulls too is that Google reported after the bell today and blew away their earnings. I mean, their revenue was great, their earnings was great. The stock is trading up to $588 a share in after earnings. To give you an exact price, the last time I checked it was about $590 a share, and it closed at $540. So it's a good 10% up in after hours trading, and that'll likely carry over into the market open. In fact, on Kirk Report's Twitter account, I saw that, and I retweeted this, it said that 80% of the time, or 80% of Google's earnings reports, they have beat estimates. So, gosh, I got that before, and it was almost like insider information, right? Not quite, but you talk about putting a trade in your favor. My gosh, 80% of the time they beat estimates. I should have bought a position before the bell, but as you guys know, or for those who have followed me for any length of time, you know that I hate playing the earnings game. So, if I would have bought prior to the earnings report, I would have been that guy that bought into the 20% of the time that they missed. So I didn't do that. go over a couple positions I have in the portfolio here. First one is Penske Auto Parts. This stock has been near textbook in the way that it has acted here. You got this double bottom here, almost perfectly symmetrical, and then it consolidated just above the neckline of the double bottom formation, and then yesterday, boom, we break out, and today we continue that breakout. So things are looking very positive for this particular position, and I'll tighten up the stop loss for tomorrow. But if you look at textbooks on double bottoms, they'll usually tell you from right here to right here is usually the amount. So you got about 1333 all the way down to 1168, so 1260. So you got about $1.60 right there. We got in at 1333. So this stock could easily go up to about $15 right around here before, from a textbook perspective, this stock starts seeing profit takers creep into the picture. So I'm going to hold on to this one for a little bit longer, and we'll see where it goes. DirecTV, this was a buy from a few days ago. I really like to see the action that we saw today in this, where the market was down, but this one still managed to finish up about 1%. Nice flag pattern right here after a 13-day rally, and then today or yesterday it broke out, and today it continued that. So that's also a great pattern to see in the market, or in a particular stock, especially when the market was down and this stock showed that much strength. Outside of that, BRKR, this has been a slow and steady performer here. You can see it's sort of butting its head up against the upper channel line here, but I'm not going to take profits in this one quite yet, as it hasn't really given me any reason to in the past days. Another down day in this stock that I could be tempted to take my profits in it. I've held it for quite a while now, probably 2 or 3 weeks. I bought a stock at the close, Arch Coal, and I was really debating whether or not I should buy this stock, and at the end of the day I ended up pulling the trigger. A few things working in the stock's favor. As you can see here, you had a nice level of resistance here from the highs made back in August, and it's really consolidated around those highs, but it hasn't really broken in the last few days below those August highs. But it also has tested this trend line. You can see this purple trend line here. It has tested it 1, 2, 3, 4 times and has held it perfectly every time. So there's definitely some good developments in the stock. I bought it right at the close, so I think I bought it in at like $26.94. So if you're wanting to trade along with me on this stock, there should be opportunity tomorrow, unless there's a huge gap up tomorrow in this stock that would prevent you from doing so. But you should be able to trade along with me in the stock. I got a stop loss at 25.54. So my basis for that was basically, my basis for that was trying to take the lows from this candle here and just putting it a shade below it. So that's where my stop loss is. And I put about, I think about 8% of my portfolio on this particular play. So in any case, that's going to be it for tonight. I hope you guys all managed to take some profits yesterday prior to today's sell-off. If not, there's a good chance that you'll be able to recover them tomorrow if Google can carry the day for us. Alright, so long.